G'day guys, Andrew Lutze and James Haywood here from the team at Cunninghams. Probably timely now that we've had an end of financial year to give you a bit of an update. What's happening, state of the nation on the northern beaches, and some interesting times.
Yeah, really interesting. And often, we're asked every day, what's happening in the property market. Over these years, we've kind of actually learned that it's supply and demand and confidence that kind of drives residential markets. We've had a lot of things that's been affecting both of those. So if you look at the supply side at the moment, there's currently 250 properties on the market in the northern beaches as at June. Cunninghams have got 40 properties on the market, so we've got a 16% market share, which is slightly up from last year. Those levels, those 250 properties, represents about a 32% fall in supply from this time last year.
And that's quite significant. I mean, when we think about people out there, whether you are looking to buy something, whether it's an investment or maybe you're looking to work your way up the property ladder, that's going to put a lot of pressure on what you can look at.
Yeah, we're also actually looking at what's happening in the market. Are we in an up cycle, down cycle? We've kind of looked and we feel that the technical low of the market was probably last quarter, maybe just into this year. We feel there's been a bit of a rebound sort of coming into a stable market now, factored by obviously the lack of supply and also a little increase in confidence.
Yeah, I think so. Probably what we're seeing and what we're going to see is some renewed confidence out there in the marketplace. And as you said before, James, a lot of our market, particularly on the northern beaches, we're dealing with fairly affluent area. People are fairly well educated, well, we hope. But that also means that people are driven by that consumer confidence. How do I feel about my job? And also, is now a good time to jump into that property market? So I think the urgency levels is what we're starting to see change significantly, and that will roll out over the next few months as we are into the warmer weather.
Two of the key factors that we look at to analyse markets and what's happening with markets is average buyers we get through our open homes and average days on markets, as in how long are actually properties actually staying on the market. If you look at average days on market, so currently Cunninghams we're at 31, average days on market for the rest of the market is 53. So it's showing as Cunninghams we kind of do know what we're doing here. But equally those trend numbers are coming down.
Yeah, because they haven't always been that low. I mean, we've wasn't that long ago where we saw properties. You go out and ask an agent how long's the property been on the market, and they would say 6-8 weeks, and that was pretty consistent, particularly in that last quarter of last year. So those are certainly coming down, and as those supply levels stay low, you'll see that number fall quite dramatically. And I think some of those numbers can also be attributed to whether agents are selling property prior to the auction date or whether they're running them all the way through to that 28 or even 35-day mark. So there's something just to monitor as well. One of the interesting things, though, we also see has been the number of people averaging coming through the open house inspection on a Saturday.
It's definitely up, isn't it?
It is. It's been changing. Now, you also have to take into account that not all properties are the same. They're all different price points, and therefore some are going to have more interest than others. Typically, we see a spike in the numbers in entry-level pricing for each different type of property. I.e., if we're selling an entry-level apartment, their numbers are going to be different to, say, a luxury waterfront in some of those blue ribbon areas. So the blended average, though, across all of that has been, probably a year ago, anywhere between 6 to 8 groups of people. Not tire kickers, not neighbours, these are genuine buyers. Now, what we're seeing at the moment is anywhere between 12 to 14 groups. So it's almost double those numbers. And I think we'll continue to see those numbers increase again while supply stays low.
And again, it's really showing just a bit more confidence in the market. So it was interesting last year, when that confidence was a little bit lower, we were really finding what buyers were worried about is they were worried about the upcoming elections, both state and federal, and what was going to happen there, especially on the back of the Labor were having a lot of quite radical property policy changes. And the upcoming Royal Commission findings as well, because obviously banks were tightening, they were very nervous acting the market. We were really finding deals were getting affected, by people not being able to get their finance. Then we sort of came into this year, obviously we went past actually the Royal Commission findings, and then banks are already starting to actually ease up a little bit. And then the election results was quite a surprise. So whether you liked them or not, Liberals getting in has actually given a bit more confidence to the property market, because again, those radical property policy changes for negative gearing, the changes in the threshold for capital gains tax as well, didn't come into fruition. So it's just given people a bit more confidence in the property sector.
Yeah, I think that on top of a few other things that have given that confidence back to the market have been also those interest rate cuts, and even one this week has been quite dramatic. So we're probably going to see the full depth and also breadth of whether that interest rate cut has had a profound effect on people this Saturday. We're going into an interesting time where we've got school holidays coming up for 2 weeks.
Yep.
That typically skews our numbers as well. So a lot of people tend to go away for ski holidays, or whether they're going overseas to have a bit of a warmer
You
holiday.
going away for a holiday, Andrew?
No,
you're not. Good.
Working on my moon tan back here. But I think those things are also something to keep in mind as well. But certainly having 2 back-to-back rate cuts, that's only increased the affordability for a lot of people, particularly first home buyers. So we'll start to see that space probably move again. But all of this underlying movement in the market is not really going to change pricing. What we are going to see is that a lot of people who have been on the fence, whether they're looking to make a move, whether they're selling or they're ready to jump into the market, who've been watching the market for the past 20, 24 months, this is only going to solidify a reason for them to probably move back into the market. So again, those days on the market, and also there's people coming through those average numbers, we're going to start seeing those numbers increase. For example, we had a property open for the first time last weekend in North Bay Gala. Entry-level pricing for a freestanding house in that suburb, we had over 55 groups of people come through.
And we haven't seen those types of numbers for a while, have we?
Not since 2016 days. So I think we're going to see more and more of these examples coming about, particularly as affordability is great, because we've never seen interest rates this low. We've never seen the bottom of the market come back this much. So the opportunity for someone to jump in the market if they've been holding back is excellent. Like, it's never been a better time. And equally, if you're moving your way up the ladder, you've already holding on to an existing property, then also this provides that freedom to allow you to do that as well. So it's going to be a very interesting time, and that particularly will become apparent in August as well, which is pretty much the new spring for us.
It's interesting, isn't it? The amount of conversation happened last year with people going, we think the market's falling, we're just going to wait. Yeah. So now this year they've gone, we think the market's fallen, not a bad time to buy.
Yeah.
And they're kind of behaving exactly like that.
And that will change as well when we get to, because that firm date, that people have around the 1st of September, we're going to wait till spring, see what happens in spring. Yeah. That's not really the case anymore.
That date's definitely shifted over the years, hasn't it? Rather than being a firm date. Yeah. I think there'll be a lot of people trying to capitalise on that. There's not much stock on the market. Yeah. So why don't we actually get on early spring and capitalise on that? Not much competition on.
Yeah, I think, and also there's a couple of key things to watch as well. The spring market typically, yes, produces more property. It does also produce more buyers. But in saying that as well, there's a break in the spring market, and that's that October long weekend. So what you'll see is a rush of properties, if they are auction campaigns, coming on from around about mid-August, and we'll probably see that culminate around that October long weekend deadline. So there's a few different windows there, and then there's a final block of sales that we typically see after that deadline in November until about the first weekend of December. So if you work backwards and saying, I want to be in a new home by Christmas, well, it's
time to get a move on.
It's time to get a move on,
Yeah, so we kind of feel, rather than we're in an up market, down market, we just kind of think we're in a nice, stable market, which kind of is a nice thing between buyers and sellers. It's not really a reason to hold or to rush in. Yeah. It's just that if the time's right, we think it's a good time to be a buyer and a seller in a good, stable marketplace.
Yeah, those headwinds are gone, definitely, from what we've seen, and certainly a bit of a push in the right direction with some help from the government has stabilised.
Yeah, and the banks, I think, are loosening up a little bit, so we're finding less deal interruption from people not being able to get their finance, so things are a bit smoother.
So thanks for checking in. James Haywood, Andrew Lutze. We look forward to seeing you out and about. If you've got any questions, please shoot them through. We're always happy to help.
Thanks, guys.